Hello, welcome to the session on developing fraud detection and mitigation in a real time digital ecosystem. Let's understand what we are going to have our session on in terms of what's going on in today, which is the lineup, which is the first area which we are going to highlight upon, gaps and challenges, broad roadmap, do's and don'ts, and be the enabler. I always start my session video which explains the theme of my presentation, and that's today's theme is fraud. Let's look at what does fraud means.
Insurance fraud is any act committed with the intent to obtain a fraudulent outcome from an insurance process. This may occur when a claimant attempts to obtain some benefit or advantage to which they are not otherwise entitled, or when an insurer knowingly denies some benefit that is due. According to the United States Federal Bureau of Investigation, the most common schemes include premium diversion, fee churning, asset diversion, and workers' compensation fraud. The perpetrators in these schemes can be both insurance company employees and claimants. False insurance claims are insurance claims filed with the intent to defraud an insurance provider. Insurance fraud has existed since the beginning of insurance as a commercial enterprise. Fraudulent claims account for a significant portion of all claims received by insurers, and cost billions of dollars annually. Types of insurance fraud are diverse, and occur in all areas of insurance. Insurance crimes also range in severity, from slightly exaggerating claims to deliberately causing accidents or damage. Fraudulent activities affect the lives of innocent people, both directly through accidental or intentional injury or damage, and indirectly as these crimes cause insurance premiums to be higher. Insurance fraud poses a significant problem, and governments and other organizations make efforts to deter such activities. The chief motive in all insurance crimes is financial profit. Insurance contracts provide both the insured and the insurer with opportunities for exploitation. According to the Coalition Against Insurance Fraud, the causes vary, but are usually centered on greed, and on holes in the protections against fraud. Often, those who commit insurance fraud view it as a low-risk, lucrative enterprise. For example, drug dealers who have entered insurance fraud think it's safer and more profitable than working street corners. Compared to those for other crimes, court sentences for insurance fraud can be lenient, reducing the risk of extended punishment. Though insurers try to fight fraud, some will pay suspicious claims anyway. Settling such claims is often cheaper than legal action. Another reason for fraud is overinsurance, when the amount insured is greater than the actual value of the property insured. This condition can be very difficult to avoid, especially since an insurance provider might sometimes encourage it in order to obtain greater profits. This allows fraudsters to make profits by destroying their property, because the payment they receive from their insurers is of greater value than the property they destroy. The most common form of insurance fraud is inflating the value of the loss. Insurance companies are also susceptible to fraud, because it's possible for fraudsters to file claims for damages that never occurred. It is hard to place an exact value on the money stolen through insurance fraud. Insurance fraud is deliberately undetectable, unlike visible crimes such as robbery or murder. As such, the number of cases of insurance fraud that are detected is much lower than the number of acts that are actually committed. The best that can be done is to provide an estimate for the losses that insurers suffer due to insurance fraud. The Coalition Against Insurance Fraud estimates that in 2006 a total of about $80 billion was lost in the United States due to insurance fraud. According to estimates by the Insurance Information Institute, insurance fraud accounts for about 10% of the property/casualty insurance industry's incurred losses and loss adjustment expenses. The National Healthcare Anti-Fraud Association estimates that 3% of the healthcare industry's expended.
Thanks for watching the video, and let's look at what's happening in the world right now, and how technology is taking over the shape what it is now in terms of the way the people are, the way the people should be, and the way their behaviors are. If you look at the picture, you'll see people are all around, right? From their social medias to the emails to the Twitters to the whatever technology, and this is how the millennials look like. And there's a big phrase which is millennials aren't killing industries, we just broke and your business sucks. And you know, internet was just born 27 years ago. They recently internet celebrated its 27th year, and the entire paradigm of business is changing the way it is. What's going on in the competition side of it? In today's parlance, if you look at new pressures on prices and margins are coming in, the products and everything which have been the same across the industry having a new evolution, and insurance is also not far behind. New on-demand insurance is coming in. The typical traditional insurance are getting challenged because the way the rates are and competitors fight on the rates. New age players are coming in and competitors are emerging from unexpected places. You have a classic example like in the insurance space, the new players like Neo Insurance or Lemonade or Zhong'an of China, which is not fighting the race what typical traditional insurers are fighting. They are creating products and services which are totally different for what typical traditional insurance market has been offering. And if you look at it, winners takes all dynamics. I mean, India is a classic place wherein you'll see a lot of emerging startups are coming in and they're taking away the big piece of the market which was unexplored or unexpected. Plug and play business models. You are seeing a lot of talent mismatches, converging global supply and demand, and relentlessly evolving business model at a really high velocity. So these are the 7 forces which McKinsey worked out, and they fit into the today's world. And this is where the business models are changing. Now let's understand what are the key gaps and challenges in the insurance space in terms of how the frauds have been evolving in the insurance space or financial services space. As a statement says, insurance or banking or any financial services by its very nature is especially prone to fraud, and it's just not a statement, it has a very very big depth which in the subsequent slides I will talk about it. Now let's look at where are the areas. I mean, if you look at it, when the slides look a bit cluttered, you'll see the areas are underwriting and claims, the forms of risk declaration, and the sale of insurance product. You'll see a lot of frauds happening where people are tampering documents, people are tampering the data. Digital transformation is one of the areas where you'll see a lot of frauds happening, wherein through digital transformation a lot of things get undetected even if they are linked to your social IDs like your Aadhaar, the PAN cards. The consumer services definitely are going through fraud areas, the marketing, the corporate risk, and the most important is the pricing. And if you look at it, the country-wise, the classes of business, if you look on this important slide wherein actually the depth of the losses can be understood. Like countries like Germany, in all classes of business, you will see 10% of the losses cost is because of the fraud. Australia, again, all classes of business, 10% of the losses cost is across lines of business. Canada, all classes of business, 10 to 15%. Spain, motor alone fraud cost 22% of the losses cost. Great Britain, 7%. Scandinavian countries, all classes of 5 to 10%. United States alone in motor is having 11 to 15% of the losses cost. And all classes of business, it's 10% of the losses cost. And if I talk about some numbers, if you look at India alone loses 6.25 billion US dollars to insurance frauds. And this is just not a small amount. And there was a research done in terms of the cost out here in the slide. It is shown as a percentage, but if you look at it, UK alone has 2.1 billion per annum fraud as a cost against the overall process. France is having 3.9 billion. South Africa is 1/3 of all insurance claims were considered. So every claim out of 3 claims is a fraud in South Africa. US alone has 80 billion each year worth of US dollars of a fraud cost. So these are some numbers which I wanted to highlight upon. Now let's understand the typology of a claim. If you look at, I have categorized them into 3 types, which is internal versus external, underwriting versus claim versus sales versus process, and soft versus hard. Now this slide is important to understand how internal versus all the 3 areas of a claim in terms of typology is there. Let's look at the first one, internal fraud. Internal fraud is committed by insiders of the insurance industry such as insurers, agents, brokers, managers, and other insurer employees or of representatives. This covers, for example, selling insurance without proper license, embezzlement of insurance funds, and obstruction of regulatory body investigation. Now let's understand what's external fraud. External fraud is a fraudulent activity on the part of outsiders of the insurance such as applicants, policyholders, claimants, and sometimes perpetrated in collusion with insiders such as agents or brokers or third-party service providers. External fraud covers, amongst others, providing false statements and submitting bogus claims. It also includes cases of professional providers of services to insurers like middlemen and claimants, billing insurance for non-existent or unnecessary procedures or services, misrepresenting services provided and charging insurance for the same services more than once. Now let's understand the second point, which is underwriting versus claim versus sales versus process. Fraud can be committed both at the underwriting as well as at a claim time. Underwriting fraud, which also includes fraudulent acts perpetrated at renewal of the insurance contract, covers, for example, dissimulation of information during application, like application fraud, to obtain a coverage or a lower premium, which is a premium fraud. The deliberate concealment of existing insurance contracts covering the same P&C risk, which is property and casualty risk, and underwriting coverage for fictitious risk. Note that the policy holder is obliged to report any new information that comes to his attention during the course of the contract and is likely to affect the insured risk. Nonetheless, the concept of insurance fraud is most often associated with, sometimes reduced to, cause of deliberately inflated, false or fictitious claims, which is considered as a claim fraud. Sales, I have talked about it, and the process frauds are in the entire process. There is a leakage, and that becomes internal fraud in terms of the people playing around with the process. Let's look at soft versus hard. When using a broad definition of insurance fraud, one typically distinguishes between soft and hard fraud. The label soft tends to be broadly associated with unwanted, opportunistic behavior of normally honest people. What behavior exactly falls under this category is not always made explicit and depends on the stakeholder using the vocabulary, but it generally includes claimants seizing an opportunity to inflate the damages of an otherwise legitimate claim, like claim padding or build-up. Adjectives soft and opportunistic have been used interchangeably. The label hard tends to be associated with carefully premeditated and minutely executed scams to rip off insurance. Examples of hard insurance fraud are filing claims for bogus or staged injuries, accidents, burglaries, fires, conspiracies involving medical doctors, lawyers, and patients, defrauding workers' compensation insurance, dishonest insurance agents intentionally failing to remit premiums to the insurance company, and insurers negotiating contracts or provide claims in bad faith. See, fraud affects all classes of business. The classes that are most common and used by the public at large are the most affected. And in India, 70% of the frauds are either are in general or in P&C insurance. And if you go by the global strategy in terms of looking at the insurance fraud, the numbers are more or less the same. But if 70% of the total frauds committed are normally across the globe is in the property and casualty or a general insurance, majorly in the medical bill certificates, which is 31% in India, driving license, which is 16%, FIRs are 13%. These are some numbers which are some scary numbers which we look at it in terms of the fraud. Now let's understand what we can do with the fraud and understand the key challenges. Key challenges are, I believe, are the internal politics. Internal politics also take over, wherein the processes are dependent on a single person, and they own that process, and then they don't let go to make it happen. Fear for failure. Even if you try to implement some good practices over the fraud, chances are people are smart enough to actually take over that, and then that's when the fear for failure comes in. Then the companies get too much focus on a business value or the ROI, but they don't understand the depth we are sitting on in terms of the frauds which are happening. Next to are more of a cultural points which are challenges in frauds. It's very slow to embrace that kind of change across the organization to implement some good anti-fraud practices. Then executive leadership support. If you look at, India typically is a country which reacts after the disaster happens, and executive leadership only reacts when the disaster happens. And this is where executive leaders should take preventive measures to contain the fraud, because they don't understand the volume of frauds which is happening. Now let's understand how we can set up a framework and best practices for real-time fraud ecosystem. This important slide is to build a roadmap for developing a fraud-based ecosystem. The most important thing I believe for a fraud is to understand the data. And this is where the importance of data comes in. And data is lying all across the insurance company, whether it's commercial underwriting, which is on marine, fire, building, whatnots, whether it's on retail underwriting, which is on typical home, motor, travel products, and they're lying everywhere. And the same set of partners are selling all the set of products, but there is the convergence of data is not happening. So my preference would be to converge the data sets and pull them and try build a framework which is based on data and rules to identify, detect, and mitigate the frauds. Then create partnership within the organization, outside the organization with their partners, or partners can be brokers, agents, garages, surveyors, and help them, educate them to build an ecosystem to have fraud preventive practices. And if you bases the data, again, you go back to your data and keep analyzing how you are building that framework. Culture for all. And in my last slide, I did talk about how important it is to roll this out across the organization, have penalties, have kind of strict measures to control, and put a culture which goes on to the last mile employee of the organization. And post the last, not the least, is the monitoring part of it. Continuously monitor the rules and the emerging threats and trends in this space. So these are some key points which are like create an environment where ideas can originate at any level in the business. Invest in ways to share ideas both online and real time. With now technology coming in so beautifully across the organization, we can collaborate within the organization wherever in whichever part of the country or the world the employees are, or the partners are, or the entire ecosystem is. Use prototyping skills to show real things to wider business. Do small projects, execute certain processes, prototype them, make them more predictable, and make them more preventive. And now with the technology coming in, we need to broaden our toolbox. Play with ways to build multidisciplinary teams. Small teams can do big things, value skills over job titles, and most important is coach the coaches. I believe fraud prevention and fraud mitigation and fraud identification should be put as a key performance indicator in the appraisal of each and every one, whether it's the employee, whether it's a partner, whether it's a broker or an agent or a garage or a surveyor, whosoever. Prevention should be incentivized and mitigation should be incentivized. Identification also should get incentivized, and heavy penalties in case in the identification is taken up. So it's up to the organization, wherever you guys are from or wherever you people are from. It doesn't fit, one size doesn't fit all. So you have to go back, draw a blueprint, draw a roadmap for your respective organization, hyper personalize it, make it more user centered. Create a lab. This is more important because if the focus is not coming in, you need to create labs to get a focus around it. Work with a lot of RegTech companies, which are catalysts for innovation. And in the RegTech world, it takes care of all the regulations, sandboxing of the regulations, and then you can execute the rules across the systems and the process. And this is how the compliances can be developed across your systems and the processes, which is against the policies, the transparency, the regulation, the governance, the standard, the rules, requirements, and the law. Define a fail rate. Once you're setting up such kind of things, you should define the fail rate. I believe for Tata's, failure is a gold mine. Change the message, and you have a very, very short reaction time, because the quantum of loss you are going to suffer, it impacts your financial statements, your shareholders, your policyholders, your claimants, everyone in the ecosystem. So reaction time is very, very small. By the time the fraud has been occurred, it's very, very difficult to recover that kind of thing, the loss which has gone in. I end my presentation by saying a very important quote from Pablo Picasso, which says, "Everything you imagine is real, and what you can't imagine is happening." That's me. Thank you. And if you have any questions, please reach out to me.